Done. Okay, 40. Okay, done about this one. Okay, so if you have anything, please, maybe you can see some of the things that you have in the chat about that. So we're going to look at the diluted earning per share. So diluted earning per share, we already imagine what happened. This is not the actual one. We'll try to imagine what happened to your earning per shares. Okay, if you change or you convert your POS to the ordinary share. So diluted earning per share, we just want to imagine when you convert your POS to the ordinary share. So once you convert here, okay, the effect here going to affect both to your incomes and net income and also effect to the ordinary share. Net income may be increased, the ordinary share also going to increase. Okay, we already look at example 4 previously. The example 4 here is related with the only one POS. You have the options. Okay, so going to, there are 4 types of POS here. We're going to have here either that one is related with the options and warrants. Then you have preference shares, convertible debt, okay, that one or convertible loan. And then the other ones you have is source. Is source here is given to the, and like the one that you have for share-based payment last time. Okay, given to the employee, shares that are given to the employees. So in the case here, when you have more than one POS, previous example 4 is only one POS. Okay, now we're going to look at whether what happened when we have more than one POS. So we need to test whether they are dilutive or anti-dilutive. So what is a dilutive? What is anti-dilutive? So the step that we have here, the first thing we need to compute the earning per incremental share. So earning per incremental share here is increase in the income or increase in earning divided by increase in number of ordinary share based on the new POS. For each of the POS, we need to compute the earning per incremental shares, EPS. So how to find the EPS for each? Is the increase in the earning divided by increase in the number of ordinary share. Okay, the second one, we need to determine whether they are dilutive or anti-dilutive. So determine whether that one is a dilutive or anti-dilutive. You need to compare between EPS and basic earning per share. So basic earning per share here is your control number. Control number. But for the basic earning per share, make sure that the basic earning per share should be calculated from the continuing operation, means that we're going to exclude discontinued operation. Profit from discontinued operation, we're going to exclude this one. So we're going to compare between EPS and the basic earning per share. So if the EPS is higher than the basic earning per share, then it's considered as an anti-dilutive. So anti-dilutive should be excluded from the calculations of the EPS. You're not going to, no, you cannot include from the calculations of diluted earning per share. You cannot use this one because this one is anti-dilutive. Anti-dilutive means that your EPS is higher than the basic earning per share. Okay, the other one is when the earning EPS is lower than the basic earning per share. That one is considered as a dilutive. So dilutive here will be included in the computations of diluted earning per share. And then the lowest being include first. The lowest being include first here means that you need to rank. Rank your POS, which one has the lowest EPS. Okay, and then the lowest going to be include first and so on. And then the worst here, the lowest figures here will be your diluted earning per share. So when the EPS is lower than a basic earning per share, then consider as a dilutive. So dilutive is going to be included in the calculations of a diluted earning per share. So the lowest here will be the diluted earning per share. So we need to rank. If we have more than one POS, we need to rank. The first one is the POS that has a lowest EPS. Okay, so if you have more than one potential share, the entity use profit or loss from continuing operation. Yeah, we're going to use from continuing operation attributable to the parent entity as a control number to establish whether the ordinary shares are dilutive or anti-dilutive. Yeah? Okay, and then if you have a discontinued operation, profit or loss from continuation operation attributed to the parent should exclude item that relate with the discontinued operation. We're going to exclude the discontinued operation. So we only consider profit from continuing operations. Okay, so we try to look at example 5. So example 5 here is about Dahlia in the year 2018. Okay, Dahlia has options of 7,500. Okay, the price here is 18. Price is 18. And then has a convertible bond, 8% convertible bond. Nominal amount is 50. Each of 1,000 can be converted. Each of 1,000's value here. Okay, can be converted to 50 ordinary shares. So to find how much you can convert here should be 50,000 divided by 1,000 times with 50, 50 unit of ordinary shares. Okay, and then convertible preference shares, 10,000 shares entitled to accumulative dividends of 3 ringgit per share, which is already net after tax. So the amount here is 3 ringgit here is already net after tax. And then each of these preference shares can be converted to 2 ordinary shares. So 10, then you're going to times 2, so you'll be entitled for 20 if you want to convert to ordinary shares. The tax rate is 25%, profit after tax here is 3 million. Yeah? Okay, and then the net profit attributable to the ordinary share after minus the preference dividend. So it's already given here 1 to 5 here, already given here 1 to 5. Number of share outstanding here is 50, and then the average fair value here is 25. So we need to use this information when we calculate for the options here, because we need to know that the difference between options here, we're going to have a bonus element here, is difference between average market value minus the exercise price. There is elements of the bonus. Okay, we need to calculate the basic earning per shares and then diluted earning per share. So basic earning per shares here based on the net income. Okay, net income divided by number of shares outstanding. Outstanding that. Okay, so 50, the 125 divided by 50. So 2 ringgit and 50 here will be your basic earning per share. So this one will be a control number. Where you want to compare here whether that one is a dilutive or anti-dilutive here. Okay, you're going to compare with this number. If that one is lower than the basic, you consider it's dilutive. Okay, and the anti-dilutive here when the figure is higher than basic. Yeah? Okay, so the control numbers here is 250. Okay, so we start calculate for the EPs. So EPs, the first one you have the options. So options here, there is not relate with any dividends. There is not relate with the dividend. There is no relate with the interest. So means that there is no effect to the earnings here. So the earnings here will be zero. Increase in the earning will be zero because there is no effect on earning. Because option, there is no dividends given to the option. There is no interest. It's not relate with the items in the that affect the earnings. So the increase in earnings here will be zero. So the increase in the shares here, we only need to know the elements of bonuses. So the increase in shares here. Okay, you have 7,500. So 7,500 is the total options given here. So options given. Okay. Then time with 25 here is average market value divided by exercise price and then divide by average market value. So you're going to have 2,100. So 2,100. So you're going to have the increase in EPs here is increase in earning divided by increase in ordinary share. So increase in earning here is 0. Ordinary share is to 100. So you're going to have here is a 0. So 0 compared with the basic here is 2 ringgit. And 50 cents. So 0 is lower than 2 ringgit and 50 cents is considered as a dilutive. Yeah. That is what you have for the option. But remember, For the options here, we only want to find the elements of bonus only. Yeah? Okay, the next one is a convertible bond. So convertible bond, so once you convert bond to ordinary shares, okay, when you convert bond to ordinary share means that you don't have to pay for the interest. Convert to bonds to ordinary share means that there is no interest paid. So once there is no interest paid, you're going to have increase in earnings. So but the increase in earnings should be net after tax. Should be after tax. Okay, so increase in earnings, you have 8%, 8% bonds, 8% convertible bonds. So that is the interest amount time with 50, the value of that bond. And then time with 1 minus 25 here is the net after taxes, 75%. Yeah? So you're going to have increase in earning 3. Okay, and then increase in shares here. Okay, from that 50 here, 1,000. So divide by 1,000 here. Okay, from 1,000 can be converted into 50 units of ordinary shares. So 50 divided by 1,000 times with 50, so you're going to have 2,500. So 3 ringgit divided by 2,500 here is 1 ringgit and 20, so lower than the basic, so it considered as a diluted. So remember that when you answer the question for the EPS, you need to provide either that one is dilutive after you prepare the answer for EPS. Then you need to state whether that one is a dilutive or anti-dilutive. Yeah? So in this case, you have 1 ringgit and 20 compared with the basic here. The basic is higher, so you're going to have a dilutive here, 1 ringgit and 20 for the bonds. Okay, and then for the preference shares, so the preference shares, once you convert your preference shares, okay, when you convert preference shares to ordinary share, means that there is no dividend paid. So once there is no dividend paid, means that they're going to increase in your earning. Yeah? So increase in earnings here, 3 ringgit here. So this 3 ringgit is already net after that. So just time here with 10,000 units of preference shares. So 10,000 times with 3, so you have 30,000. So increase in earning will be 30,000. Increase in share, the conversion rates here is 1 preference shares can be converted to 2 ordinary shares. So 2 times with 20. So you're going to sorry, 2 times with 10, so you're going to have 20. So 30 divided by 20, so you're going to have 1 ringgit and 50, which is lower than basic 2 ringgit and 50, so it's considered as a dilutive. So you already done for the first one, you already calculate for the EPs. Okay, the second one you need to rank. Actually, the first one is basic. You already calculate for the basic. Basic here is 2 ringgit and 50. And then the second one is EPs. And then the third one you need to rank. Rank based on the EPs. And based on the EPs, the lowest. You start with the lower. The lower here is option. Okay, the first lower is option because the EPC is on 0 here. And then the second one is a convertible bond, okay, which is the EPC is 1 ringgit and what you have here 1 ringgit and 20. And then the last one you have a preference share, which is 1 ringgit and 50. So ranking here, you start with the lowest first. This one will be number 2, this one number 1, number 2, and number 3. Is on the ranking. So from that ranking, then we're going to calculate the last one is a diluted and then a share for each of the EPs, for each of the POS. Okay, this is a ranking. We already rank that one. Okay, the first one will be options. Okay, so from the ranking, then we're going to calculate for the diluted earning per share. So the first one is the basic plus options. So basic here is 1 to 5 for the earnings plus POS. Okay, and then divide by POS here is referred to the EPS, EPS increase in earning. Okay. Okay, plus increase in earning for each of POS and then divide by shares, outstanding share plus increase in outstanding share for each of POS. Okay, we start with the first rank here is option. So increase in earning basics here is 1 to 5 plus increase in earning for option is 0. And then for the number of shares here is 50 is the existing and then plus 2.1 here to 100 here is the increase in share when you exercise the options here. So you're going to have 1 to 5 divided by 52.1. Yeah? So you're going to have 2 ringgit and 40. So if you look at here, the basic here is 2 ringgit and 50. Now when you add the option here, it becomes 2 ringgit and 40. So remember that the diluted earning per share here should be lower than your basic earning per share. So if you look at here, when you add options, the diluted become 2 ringgit and 40, which is lower than your basic. Yeah? Okay, the next items here is basic plus option plus convertible bond. Yeah? Okay, so for a basic, you have here is 1 to 5. Options here is a 0. Convertible bonds here is 3, yeah? Increase in earnings of 3. Yeah? Okay, and then divide by number of share basics that you have here is 50, options to 100, and then convertible bonds here is another 200 and 2.5, 2,500. So altogether you're going to have 54,600. This one become 128. So 128 divided by 54,600. So now it become 2 ringgit and 34. So basics 2 ringgit and 50. Basic and options. If you look at basic and option 2 ringgit and 40. Okay, basic plus options plus convertible bonds is become 2 ringgit and 34. That one keep on reducing. Yeah? Okay. Then the last one is a preference shares. Okay, for preference shares that we have here, okay, basic plus options. So basics 1 to 5 plus options 0. Bonds here is 3. Preference shares is 3, 30,000. 30,000. Okay, so you're going to have 1 to 8. This one is 1 to 8 plus 30. And then basics here is 50. Options to 100. Okay, convertible bond 2.5. Preference shares that you have here is 20. Yeah? So add together, you're going to have 74,600. So 158 divided by 74,600. So 2 ringgit and 12. So 2 ringgit and 12 is the lowest. So if you look at basics, 2 ringgit and 50. Basics plus options 2 ringgit and 40. Basic plus option plus convertible bonds here is 234. Basic plus option plus convertible bond plus preference shares here is 2 ringgit and 12. So the lowest figure become your diluted earning per share. So once you present in your income segment, so item in your income segment, you need to present here. The first one is a basic earning per share, and then the second one is a diluted earning per share. So this figure, okay, and also this figure, the lowest figure, the figures, latest figures that you have, the lowest figures going to be your diluted earning per share. Okay, so that one is example 5. Example 5 is simple because we assume that all the POS we convert to the ordinary shares. So now we're going to look at what happened if the diluted basic earning per share when not all POS are converted to the ordinary share. Not all the POS, not all for the POS here means that only a portion of the POS is converted to the ordinary shares. Okay, so calculation for a basic earning per share, we need to consider the proportions of the POS that have been converted. For the basic earning per share, we need to look at the actuals that already converted. Okay, that one I already converted. That one is for a basic. But for a diluted, we just want to imagine only. To imagine. So this one you have to be careful. So you're going to expect on the portion of POS that has been converted to ordinary share. So your POS here going to have two elements or two parts, the one that are converted and then the other one that is not converted. So two, right? If let's say you have 10 here, maybe you convert 4, the one not convert here is 6. So this one that you have here. So convert here, so be careful with this one. For the one that you convert, the proportion of POS that has been converted should be calculated from the beginning of the year, 1st of January, or at the issuance date, okay, until the conversion date. So you need to calculate the periods here. This is the period referring to the period. Proportion here is referred to the periods here. Okay, from the beginning of the year or at the issuance date, which one is the earlier, until the conversion date. Okay, that one is the one that you convert. The one that is not convert here should calculate from the beginning of the year or the issuance date until the year end. Until the end of the year for the end of the current year. Yeah? So be careful with this one. Please remember this one. Yeah? This one is very important. Okay, so we try to look at example 6 here. So example 6 here, in the year 2016, they issued 10 million. Common share is ordinary shares, one ringgit at par. And then in the year 2017, they all issue convertible loan. Okay, convertible loan, 10 million or so. And then each of 1 million can be converted to, each of 1,000 can be converted to 1,000 ordinary shares. Okay, convertible rate. Okay, 1,000 to 1,000 ordinary shares. Cempaka also issue 1 million, 7% convertible preference shares at 1 ringgit par. So this one will be 1 million. One value here is 1 million. Each of preference shares can be converted to 4 ordinary shares. So 1, 2, 4. Okay, so issue here is in the year 2017. So now this is information that you have in the year 2018. So it means that in the year 2017, you have shares outstanding. Outstanding shares that you have here is 10 million. And then you have convertible loan is also 10 million. And then you also have a preference shares 1 million. So means that these kinds of shares or these kinds of loan and preference share is already exist in the year 2017. Now in the year 2018. So year 2018 on 31st of March, when declare one bonus issue for each ordinary share outstanding. So one bonus issue, this things is already exist. So both ordinary share plus convertible loan plus preference share, if they convert to ordinary shares, they are entitled for a bonus because they are already exist before the issuance of bonus or declare of the bonus will declare in the year 2018. So means that once you convert your convertible loan and preference share, both of these convertible loans and preference shares are entitled for a bonus. Okay, because they already exist in the year 2017. The bonus was declared in the year 2018. Yeah? Okay. On 30th of April, convert 3 millions of loan. So your total loan here is 10 million. From that 10 million, you convert only 3. So means that the one that not convert here is 7. Yeah? Okay, and then on this one is a date here. The date conversion date here is on April, so 30th of April. Okay, and then the other ones you have 3 from preference shares, total preference shares, you have 1 million. From that 1 million, 300 convert. The other 700 is not convert. The conversion date was on 30th of May. Okay, and then on 30th of July, granted stock options. So granted stock options, 12 million shares of ordinary share to the employee with the exercise price of 1 ringgit. Yeah? So the average fair value here is 2 ringgit per share and fair value of 1 ordinary share on 31st December here is 2 ringgit and 50. So you need to be careful when they give you average and then the other one is fair value. To calculate for a bonus here, for a bonus element in options here, we're going to use the average fair value. We're not going to use this fair value. We're going to use average. Look at the one that had the word average here. Okay. So the net profit here is 3 million and then the tax rate is 25%. Yeah. Okay, so this is information that you have and are required here to calculate basic and number shares and also calculate EPs and diluted. Yeah? Okay. So we start with the basic earning per share. So for a basic earning per share here, we need to look at the changes in the profit. Yeah? So changes in the profit, remember that for the earnings here, to calculate the basic earning per share here is the net income minus a preference shares dividends divided by number of shares. Okay, preference shares dividend. So if you look at here, for a preference shares, you have 1 million. In that 1 million, you convert 0.3 or 300, and then the one that not converted is 700. So this 700, the one that are not convert here, the conversion date was on 30 of May. 30 of May. Okay, so you convert, this one is not convert. The one that are converts here, because you convert here, you do not hold the shares until the end of the year, do not hold until 31st December. Okay, so you are not entitled for a dividend. So not entitled for a dividend. So the dividend that you need to pay here is only the one which is not convert. So you need to pay a dividend of 700 only. That 300 shouldn't have to pay a dividend because the holders or the owners of the preference shares convert that one to the ordinary shares, means that they hold only up to 5 months only. So they not hold until the end of the year, so they are not entitled for a dividend. So the one that entitled for dividends here is only the one which is not convert, which is a 700. So 700 times with 7, the one that convert, time with 7%, and then time with 75% because you want to find net after tax. So now the 3 million minus 36,750. So you're going to have this one will be your new earning. Yeah. So earning. And then the next one you need to calculate for the number of outstanding. Yeah. Outstanding shares. Okay. Number of outstanding share. This is existing that you have. Plus 10 here is from bonus. Bonus is 1 to 1. Yeah. Okay. So bonus. And then this one is the one that you convert from preference shares. You convert preference shares, convertible preference become ordinary shares. Sorry, this one is for this one. Okay, good. Look at this one first. This one is a convertible loan. Yeah? So convertible loan, you convert loan, convertible loan on 30 of April. So 30 of April. So starting from 30 of April until 31st December. Okay, these 3 millions of loan become, okay, 3 millions of loan become an ordinary shares. So 3 million, we want to find in terms of number, 3 million divided by 1000 times with 1000, the conversion rate here, time with 2 here because of the bonus element, because this loan is already exist prior to the announcement of the bonus. And then this one 8/12 here is starting from 1st of May onwards, that one become an ordinary share. So it's already changed from loans to ordinary share. So that's why we need the time with 8/12. Okay, that one is for a loan. Okay, and then the next one is for preference shares. So preference share, the one that you convert here is 300. Time with 4 here is a conversion rate. And then time with 2 is a bonus. 7/12 here, because you convert this one on 30 of May. So 30 of May means that starting from 1st of June until 31st December, this convertible preference shares become an ordinary share. So you have 7 months. 7. So 20 plus 4 plus 1.4. So altogether you're going to have 25,400. So from this one you can calculate basic earning per shares, which is 2963,254 divided by 25,400. So this is what you have. Okay, so 11.1167. Yeah. So based in the exam, it gives you how many decimal point that you're supposed to use. Yeah. So in this one, it gives you in terms of 4 decimal point, because later on we have the answer which is 0.00 something. Yeah. So we're going to use this decimal point. Yeah. Okay, up to this one, do you have any questions relate with the calculations of basic and per shares? Okay. Any questions that you have there? Is it okay? So we proceed now. If there is no question, we proceed with the calculations of diluted earning per share. Okay, for diluted earning per share, the first thing that you need to do here is you need to calculate the earning per incremental shares. Okay, we start with the convertible loans. Okay, so before the convertible loans, you convert this one. For a convertible loan, you have 10 million. Okay, from that 10 million, 3 million convert, 7 million not convert. This one convert, this one is not convert. So now I want to imagine if we convert all here. Okay, increase in earnings here. So portion converts here is from the beginning of the year. This one is to calculate for the dates here, beginning of the year until conversion date. So conversion date for the bonds here is convertible loan here is on 30 of April. So 30 of April here. So you're going to have 4 over 12. So this one here, you have 4 over 12 here. 12%, 3 is the one that you convert, time with the interest rate is 12%, and then 4 over 12 here is the proportionate date, and then 7.5% here is the after tax. After tax. Okay, this is the component of convert. The one that are not convert here is 7. Okay, 7 here is 10 minus 3. This one, 7. Time with 12%. Time with, but supposed to be time with 12 over 12 because you calculate from the issuance date, from the beginning of the year until 31st December. So there is no conversion, so 12 over 12 or 1, yeah. Okay, and then time with 75%. So you're going to have altogether increase in earning will be 90 and 630. So you're going to have 720. So that is increase. So remember about this one, the one that are convert from beginning until conversion date. The one that not convert from the beginning until the end of the year. Okay, so 12 months. So suppose that this one time is 12 over 12. Okay, that one is for the earning. And then for the ordinary shares, so ordinary shares, this one is portion that you convert. Time with 2 here is a bonus. Time with the periods here is 4 over 12, same as this one. Yeah. Okay, this is the portion which is not convert. 7 divided by 1 and 1,000 times 1,000 times with 2. Suppose that time is 12 over 12. Yeah? So you're going to have altogether 16. Yeah? So 720 divided by 60 million. So you're going to have 0.045. Compare with your basics here. So this one is considered as a dilutive. Yeah? So you need to state. Okay, this one you need to put the one, whether that one is a dilutive or anti-dilutive. So when you compare here, it seems that this one become a dilutive here because it's lower than the basic earning per shares. Okay, next one we proceed with the convertible preference shares. Okay, convertible preference shares, you have 1 million. From that 1 million, you convert 0.3, yeah, 0.3 and not convert 0.7, yeah, convert this one on 30 of May, convert 30 of May. So it said that once you convert this 3,000, you are not entitled for a dividend. So for the preference shares, to calculate for the increase in earnings here, we only consider the one which is not convert. So because once it's already convert means that you don't have to pay for the dividends. So the things that you need to consider here is only the portion which is not converted. So increase in earnings here is only 700 times 7%, and then next after tax. So you're going to have 36,750. And the number of shares, but for number of shares for earnings here, we only consider the one that are not converted. For ordinary share, we need to consider both. One are convert and then the one is not convert share. Because we try to imagine if we will convert this one earlier. So this one is 300. 300, the one that you convert. Time with 4 is a conversion rate. And then 2 here is a bonus, and then 5/12 here because you convert this one on 30th of May. So you're going to have 5 months here before the conversions. Okay, and then increase in the other one is the one that is not convert, the not convert. So you have 700s, fine with 4. 4 is a conversion rate, 2 is a bonus, and then supposed to time with 12/12 here. So we're going to have 1000 plus 656, so you're going to have 66. So 36 divided by 6.6. So we have 0.0056 here compared with the basic here is considered as a dilutive here. Okay. That one is for a preference shares. Okay, the next one you have for the other POS here, you have options here. So remember that for option, there is no increase in earning because does not involve any dividends or interest, no dividend or interest here. So there is no effect to the earning. Increase in earnings here will be 0. Okay, increase in the number of shares here. For the number of shares here, the option, this is the options given. This is average market value minus with the exercise price divided by average market value time with 5/12. So for options here, you have to be careful. Options here is only from the issuance date until the declaration date until the end of the year. Okay, so it's declared on 30 of 7, 30 of July. So it start calculating from 30 of July until 31st of December. So you're going to have 5 months, 5 months only. So and then we're going to have 2.5. Okay, so for option, if you look at option, there is no time with 2, which is a bonus. So option is not entitled for a bonus because options was declared, not entitled for a bonus because option declared on 30 of May, 30 of July, which is after the announcements of bonus. Means that they not exist when the bonus is already declared. So the option is not entitled for a bonus. You don't have to time with you don't need to time with for a bonus. You're not entitled for a bonus because the option was declared after the announcements of bonus. Okay, so just calculate as a normal one for the options. Okay, so this one for the EPs here will be 0. So 0 compare with the basics here. So you're going to have a dilutive here. So 3 items for the POS here. So now we're going to rank. So the rank here based on the lowest EPs. So the lowest EPs here is start with the option because the option says it's a 0. And then the second one is a convertible preference share. So we have 0.0056. And then the last one is a convertible loan, 0.045. So based on that ranking, then we're going to calculate for diluted earning per share. Okay, so this is how we're going to calculate here. We start with the basic here. So the basic earning per share, this is the net income after we minus the preference shares dividends. So divide by number of shares outstanding. So we're going to have here is 0.1167. And then the first rank here is option. The first lowest EPs here is a ranking here based on the rank. The first one is option. So we add options here. Option increase in earnings 0, so it will be 2963. And then increase in number of share 2.5, so it's going to become 27. So divide with this one. So now it become 1.1062. And then the second one is a preference shares. The preference share is 0.0056. And this one is 0.056. So increase in earning 36. Okay, increase in number of shares 6.6. So total up we have 3. This one is 34.5. So divide with this one. So we're going to have 0.08. Okay, and then the next one, the last one, you have convertible loan 0.045. So plus with 720 for the increase in the name. So become 3720, and then For the increase in the share, 16. So altogether you have 15. So divide with these two. So you're going to have 0.037. So the lowest figure is 0.0737. So this one will become your diluted earning per share. So when we present in the income segment, you're going to have both information, basic earning per shares of 0.1167, and then diluted earning per share will be 0.0737. So both of these information is going to be presented in the face or on the face of the income statement. Okay, so for the presentations here, so the entity shall present in the statements of comprehensive income, basic, both basic and diluted earning per share, for a profit or loss from continuing operation attributable to the ordinary equity holders of the parent's company. So profit that we use here is profit for parent from continuing operations. Okay, and then for para 68, if the entity report for a discontinued operation, it should disclose the basic and diluted amount per share for discontinued operations only, either in the statements of comprehensive income or in the notes. Most of the time, we put it in the notes. Okay, if there is in the case when you have the discontinued operations. Okay, the entity shall present basics and diluted earning per share even if the amount of negative. You should present that one even though that you have the amount of negative basic earning per share. Means that you have a loss for the company. You still have to present the basics and diluted earning per shares. Okay, and then the other thing say the amount used disclosure. What is the thing that you need to disclose here is the amount used as a numerator. Numerator here is your net income, which amount that you use. Okay, and then the other one is amount of a denominator. So you need to disclose amount of net income. And then the second one is amount of weighted average number of ordinary shares. So two things that you need to disclose. Okay, others instrument including contingent issuer's preference could be a potential. Any instrument that has a POS instrument, what is kind of POS that you have? A descriptions of ordinary share transaction or potential ordinary transaction other than this accounted in accordance with paragraph 64. So you need to disclose what type of POS that you have. Preference shares, convertible loan, options, or what kinds of that you have. Yeah? This one is about the disclosure. Okay, this one is only the summary. Yeah, summary. What is the thing that going to affect your calculations of basic earning per share? Okay, effect to the income. Okay, only there is effect to the income here if there is a convertible preference shares and then convertible debt. If that one is converted, and then for the in terms of effect to the number of share split going to increase number of share, bonus also increase, right also going to increase if you exercise, share buybacks going to reduce it, reduce the number of share. Reverse share split also going to reduce because you combine the shares, reduce the number of share. Options here going to have an effect if exercise. Convertible debt and preference shares also going to effect if you convert it. Okay. For a diluted earning per shares, effect to the income, only the right issue, if there is a right issue. Okay, and then number of shares here going to increase if there is a share split, bonus, the same thing, right issue. Share buyback here is supposed to be decrease, decrease when you have a share buyback here. Reverse share split also going to have a decrease. It's supposed that decrease here, decrease. Okay, and the options here, effect to the income, no, but there is effect to the ordinary share going to be increased if you declare and announce an option, given an option or granted an option for convertible preference shares and the debts here. Both of this one going to increase their earning if you convert it, and then the number of shares also going to be increased. So this effect here or this table summarize what will be the effect to the basic earning per shares and also to the diluted earning per share. Except for the share buyback, I suppose it's going to be decreased. The same thing for this one. So going to decrease the number of shares. Okay. So that is what you have for the earning per share. So any questions that you have for, I think this is the end of the topic. Yeah. So any questions that you have for our EPS topic? Yeah. Any of you? Example 5, example 6. Try to understand, especially 5 and 6. Yeah? But if you refer to the tutorials question, most of that one relate with example 6. Yeah? Okay, you need to know about the conversions and not convert. Yeah? Okay. Which one? Not convert to just increase in earning. So, okay. Wah. Now you imagine, yeah? You imagine for the diluted earning per share, we try to imagine what happen if we convert. So we refer back to these examples. Because diluted here is only imaginations. Imaginations. Okay, we try to look at this one. Maybe this one. Okay, so look at this one. Okay, for a preference shares, okay, preference shares you have the one that you have here is convert and net convert. Okay, to calculate diluted earning per share, we try to imagine here what happened if we convert. So what happened if we convert? If you look at here, this 300 was converted on 5th of on May. So it's convert in May. So what happened to our earning per share if we convert that one earlier than May? So earlier than May means that so 1st of January until conversion dates here for this one is on 30 of May, isn't it? So what happened if we convert? Because we want to know if. Is it okay? If. I want to know what happened to our earning if we convert earlier than this date. And then for the one that is not convert, what happened if we convert? So that's why we need to time with 12 over 12 here. Is it? Understand about this one? What? The diluted earning per share is only want to imagine what happened to our earning per share if we convert. Okay, so in the case, this one we don't convert. So we don't convert. Now we try to imagine. So what happened if we convert? So if we convert here, the number of share going to be increased by 5,600. Okay, this one if we convert earlier than 30th of May, the number of share become 1,000. Okay, what? The diluted here, we just want to imagine what happened if we convert. Because the diluted here is the effect of POS. Okay, the effect of POS here will reduce your basic earning per share if you convert. Yeah? Okay, is it okay? Why is it okay, Puah? Understand about that one? Okay. Okay, any other questions that you have here? Okay, any of you have a questions? So please try to look again, example 5 and example 6. If you have a questions, I'm going to allocate maybe 15 minutes for the next class to discuss about that one. If not, but you have to submit your tutorials by 6, yeah? Okay. So we're going to proceed now since there is no questions. We're going to proceed. Maybe you need some time to understand this one. If you have a question for the next class, yeah? Okay. So can we proceed with the new topics here? So the new topics here will be the operating segments. But we need to rush in here because we have one more topic. After operating segment, we have a related party disclosure. But this topic is more on theory. Maybe I'm going to skip some of the notes, especially for the disclosure. You can read on that one, yeah? Okay, so we proceed with the next topic, yeah? So okay, so we proceed with the next topics. So make sure that you're ready with the notes on the operating segment, yeah? Okay, notes for operating segment. Okay, so you have the notes, with you now, the notes on operating segment. So we're going to proceed this one. So operating segment, and then we're going to have another topic which is related party. So this topic is more on theory. Yeah? Okay, so maybe we're going to skip some of that one. Okay, you can read that one, especially the disclosure parts. Yeah? Okay, so operating segment is a refer to standard that we are referring here is MFRS 8 relate with the operating segment. Yeah? Okay, so the things, this is the outline. We're not going to discuss about the outline here. So for the operating segment, it's most of the company, they're going to conduct more activities. So their activities here going to be segregated into a segments of unit. When there are big company, for example, Sandabi, they may have a transportation department segment, they may have a plantation, they may have investment property. Okay, so that is what you have. Okay. So they're going to have more types of business or segment. We call that one as a segment. So but accounting informations are prepared in a whole sum. They combine together. So to make the accounting information become useful, so you need to aggregate the business information, okay, by providing a segmental reporting, operating segment. We're going to provide the information based on the operating segment. So the standard provide, okay, set up here is the standard was set up to provide a better access of the organization risk and return. So once the business is segregate to segments here, so we're going to provide a better access to the organization of risk and, for example, here last time the Sandabi have the plantation, they have transportation, and then they have investment property. One of the segment, the transportation segment, provide a loss. So they know that from the profit, total profit of Sandabi, which sections provide a more profit or which sections provide a losses. So you need the user can analyze or better analyze about the risk and returns of the company. So more informed judgment about the organization as a whole to better understand the organization past performance. Yeah? So that is the what we need to have. The purpose of having these standards. Okay, so the applications of the standards here, to apply the standard, the first thing that you need to know here, we need to identify who is the chief operating decision making or decision maker. So for this one, most of the time, some of the company do not have this position. So they are referring to the CEO of the company. Yeah? So some use a managing director, the same thing. So the first thing, when we want to apply this standard, we need to identify who is the chief operating decision maker, or the CEO or the managing directors of the company. But if you have both CEO and managing director, we are referring to the CEO. Okay, the second thing is here we need to identify the operating segment. So operating segment either based on the business segment or based on the geographical segment. So we have two types for operating, based on the business or based on the geographical. And then the other things here, we need to determine the reportable segment. So, and then make a disclosure of our required information. So four things that we're going to learn here. The identify here, normally it's already given, you don't need to identify here. The second and the third one is important. The last one is only the disclosure. So we're going to focus more on these two items to identify the operating segment and also the reportable segment. That is the important parts of the operating segments. Now on this topic. Okay, so the objective of this standards here is to provide an organization should they said that the organization should disclose information. So that is the objective of the standard. Should disclose information that enable user of financial statement to evaluate the nature and the financial effect of types of business activity, which is referred to the business segment. Okay, business segment in which is it engaged and the economic environment in which is operated. So refer to the geographical segment. So we need to segregate the when you are a big company, when you have more than business segment, you need to provide information related with each of the business segment and also in which area or location of your business. For example, somebody they may have a branch in Indonesia, plantation in Indonesia, so they need to provide the informations about that business segment, the plantation, and also based on the geographical, based on the Indonesian. Okay, so you need to provide both the business segment and also the environment segment. So environmental, which is a geographical segment. So, okay, this standard is only applied to the company that are listed in a or traded in a public market or in the process of filing its financial statement with a regulatory organization for the purpose of issuing any class instrument in a public market. The same as the EPS. EPS only disclosed by the company that are listed or has intention or going to be in the process of listed in the uh, public market. If a financial report contain both consolidated and separate financial statement, you're going to have both group and company. The segment information is required in respect of the consolidated financial statement. So you need to provide the segmental reporting for the groups only. Segmental information for the groups only. Okay, for the operating segments, a component of organization that are engaged in a business activity from which it may earn revenue and incur expenses. It has its own revenue and it has its own expense. Okay, whose operating are reviewed regularly by the organization's chief operating decision maker or CEO. Okay, to make a decisions about resources to be allocated to the segment and assess its performance, and also it going to provide a separate financial information which is available, but this one is only for the company. They're going to provide also the segmental reporting. So the components here, the first one, you're going to have a business activity its own that earn its own revenue and incur expense. The second criteria here going to be monitored by CODM. And then the third criteria here, they're going to publish their own financial information. Okay, additional characteristic to identify whether that one is operating segments here. Okay, the nature of the business activity of each segment. So means maybe this business segment, okay, the first section is a food section. The second one is a beverage section. So that one you can differentiate between these two. The existence of manager responsible for them. So this food section, there is one manager. Okay, and then the same thing for a beverage section. There is also another manager for the separate managers. Okay, and then all this information is going to present by the managers here to the board of directors. So this is the things that provide a criteria whether that one is operating segment or not. The first one, they have the first criteria here. They have their own revenue and expenses, and then they have the chief operating decision maker or CEO, and then they have a separate financial statement, separate financial information. Okay, and then the last criteria is here, the nature of the business. Okay, you have the nature of business. Okay, and then there is a manager. Okay, manager, and then the information is going to present to boards of BOD. So this is criteria. You need to know this criteria to decide whether this one is operating segment or not. So be careful with this one. This most of the question is a theory questions. We need to be careful with this one. This is the criteria to determine whether that one is operating segment or not. Okay, so now we try to look at example ones here. Okay, and SF. Land consists of several departments. So you have several departments here. Okay. engaging in a different business activity. Two of the departments are military vehicles, so it's called a defense department. And then the other one is residential housing, house and office building, which is a property development department. Okay, both department generate revenue by selling their product to outside customers. So this is the first criteria. They generate their own revenue. Each of the departments here. The operating result of these two departments is regularly reviewed by the NCF CEO. So in this case, you only have CEO, CEO or CM, COMD, either one. Yeah? Okay, so this is the second criteria. I fulfill the second criteria to make a decision about resources to be allocated to the segment. So from this case, this NCS may be considered to have two operating segments, which is a defense segment and the property segment. Why? Because they fulfill this criteria. They provide or they generate a revenue, and then the other ones, their activities are monitored by the CODM. In this case, is monitored by the CEO. Okay. Okay, and then after you determine the operating segment, the first thing you need to determine the operating segment. The second step here is determine the reportable segment. From this operating segment, which one can be a reportable segment? Yeah? Okay, what is a reportable segment? So reportable segments here is operating segment. The operating segment or aggregations of operating segment that meet this criteria. So for reportable segment to be a reportable segment, you need to meet two criteria. The first criteria is 10% test, 10% test. So the 10% test, you could call this one as a quantitative threshold. So sometimes we call this one as a 10% test. So 10% test here should be test whether the revenue, assets, and also the profit. Yeah? So three items: revenue, asset, or profit here. Okay, reported revenue from both external customer and internal customer is 10% or more of the combined revenue between internal and external of all reporting segment. Yeah, later I'm going to look at example for this one. Yeah? So the things that you need to know here: reported revenue from both internal and external should be more than 10% of total revenue for all segments. Yeah? Okay, the absolute measure of it reported profit or loss. Okay, the reported profit or loss is 10% or more of the greater in absolute amount. In the case when you have a loss, okay, or it's a combined reported profit of all operating segment that did not reported loss, or the combined reported loss of operating profit that reported loss. Okay, the combination profit or profit making operating segment and the combined loss of loss making operating segment. Okay, maybe I'll answer this one. Okay, let's say you're going to have two segments. Okay, two segments. Okay, two segments. Segment A has a profit or profit of 10. Okay, segment B has a loss of 2. Okay, loss of 2. So if you aggregate here, we're going to have profit of 8. Yeah? So want to test for 10% here, we need to look at which one is the higher. The highest is a profit, yeah? Profit here of 10 compared with the loss here is 2. But for loss here, we only consider the absolute value. So if you look at here, the profit you have 10 and then the loss here you have 2. So the greater number here is 10. So this one will be the greater number. So the greater numbers here is said that you should use the greater number. So the greater number when you want to divide here, the profit divide by 10. You use the greater number. Compare between the profit and loss. Choose the higher between profit and loss here, the higher numbers here. So highest number is 10. We don't divide this one with 8. We divide this one by 10 because we are using the greater between total loss and total profit. Okay, asset of 10% or more of the combined asset of all operating segment. Asset also should be 10%. So we have three items here, either any of this one, any of these three criteria, revenue, asset, or profit should be more than 10% for the all operating segment. Yeah. Okay, and then this is the first criteria. The second criteria, to determine the reportable segment, the 10% rule, either revenue, profit, or asset should be used. However, the reported segment, external revenue should cover at least 75% of company total revenue. The second criteria here is external revenue should be more than 75%, at least more than 75% of the total revenue. Okay, so this is two criteria. The first one, you decide which one is operating segment. From the operating segment, you need to decide which one become a reportable segment. To test for a reportable segment, we have two criteria or two tests here. The first one is a quantitative test, a 10% test. So 10% test should be any revenue, asset, or profit should be more than 10% of all combined operating segment. And then please be careful with this profit for the profit here. Because the test of profit, we need to look at the higher between loss of profit. Okay, and then revenue 10%, profit also 10%, asset also 10%. Once you already pass for the 10% test, the last test that you need to conduct here is to check whether the external revenue, you have to make sure that the external revenue of that operating segment should be more than 75% of total revenue for all the company total from the company's total revenue. Okay, maybe we can look at the examples so then understand about this one. Yeah? That is a criteria. And then it said that, so before the examples here, para 15 mentioned that, so this one is another thing that is important. So para 15 mentioned that if the total external revenue reported by the operating segment constitute less than 75%, less than 70% of the organization's revenue, the additional operating segment must be identified. So you need to add a new plus a new operating segment must be identified as a reportable segment, even if they do not meet the requirements of the quantitative threshold test 10%. Even though the new the one that you want to add here do not meet the 10% threshold, 10% test until at least you reach to 75% of the organization's revenue to include to be a reportable segment. The objective for this one is to determine a usefulness of the reporting segment. So this one, you have to be careful here. Okay, para 15, Okay, para 15, you already check for the operating segment. Okay, then you already fulfill the 10% test, and then let's say segment A, B, and C fulfill. But A, B, and C fulfill the 10% test. Okay, so they can be a reportable segment. But the last test here, you need to look at the 75% of the external revenue. So let's say A, B, and C add together here. Okay, 10, maybe this one is 20, this one is another 20. So altogether, you're going to have 50. So 50 do not fulfill, so you need to add maybe D or E. Even though D or E do not fulfill the 10% test. Okay, so we're going to look at the example for this one. Okay, so this is the example that we have here. So this is a company segment. So we have three, how many segments that we have here? 7 segments altogether. A, B, C, D, E, F. Okay, so if based on the 10% test, okay, either a revenue or whatever that you have here. So 10% test, A, B, C, and okay, they fulfill the 10% test. Okay, so A, B, and C can be a reportable segment, because they fulfill the 10% test. But when you total up, okay, we assume that this one is based on the external revenue. When you total up all this amount is only 73%. So you do for the first test, you fulfill. The second test is 75% test. So 75% when you total up here, you only have 73%. So 73% is not sufficient because para it mentions that you need to have at least 75% of the total external revenue. So this one is para 13. Based on para 13, you should have at least 75%. So since you only have 73%, you need to add another new segment. So add new segment. New segments here, which one that we're going to choose between D, E, F, and G here? Okay, we're going to choose D here because D has a greater than the contributions of profit of revenue here as compared to E, F, and G. So we're going to choose D as a new reportable segment here. So D become new reportable segment. Why we need to add D here? Because we don't fulfill the 75%. That's why we need to add this D here, even though D, okay, even though they do not fulfill the 10% taxer. So we still need to add D here because we need to fulfill the 75% criteria. So when you add D here, now it becomes 81%. So 81% is more than 75%. So this is what it mentioned by paragraph 15. So the segment is already passed for the threshold test or the quantitative test. But if the total revenue is less than 75%, you need to add a new segment to become a reportable segment. Yeah? Okay, so that until you find the amount of the reportable segment should be more than 75%. Yeah? So you need to add another. Let's say when you add D, the amount is still not reached to 75%, then you need to add E after that. Yeah? Okay, until you reach to 75%. Yeah? Okay, that one is the example that you have here. Okay. So it said that the operating segment that do not meet any of the quantitative threshold, the test per 10% test, may be considered a reportable and separately disclosure if management believe that the information about that segment will be useful. So means that even though it's not fulfilled at 10%, if the management believe, so if the management believe that information is full, then they can consider as a reportable segment. An entity may combine information about a operating segment that do not meet the quantitative threshold with information about other operating segment that do not meet the quantitative threshold to produce a reportable segment only if the operating segment has a similar economic characteristic. Okay, so this one is like shares majority of aggregate criteria as listed in paragraph 12. So paragraph 12 here is related with the similar economic benefit. Similar economic environments. Yeah? So if there is a similar economic environment, they can combine that one together to become a reportable segment. Yeah? So this is what you have for paragraph 12. So paragraph 12 here, even though you don't fulfill the 10% test, okay, do not fulfill a 10% test, okay, but you can become a reportable segment if that segment has a similar economic benefit. So similar economic benefit in terms of the nature of the product, they have a similar natures of product and services, the production process, types of customer, distributions, and a regulatory environment. They are in the same regulatory environment. For example, banking. They are listed, they are subject to MFRS, and then they also have additional regulatory environment, which is BAFIA or BOFIA sometimes. Okay, if they are in the same economic environments or regulatory environment, they can combine, become one reportable segment. Okay, so paragraph 12 is another thing that are important. Okay, so you try to look at this example, illustration 2. So this is what you have. For illustration 2, you're going to test for 10% test. 10% test. So revenue here is combination of external plus internal. So if you look at here, the total revenue that you have here is 1, 2, 3. Yeah? So now we want to, for example, for component 1, we want to test the 10% here. So we're going to have here is 80 divided by 1, 2, 3. So you're going to have 65 here. Okay, this one is 25 divided by 1, 2, 3. Total up internal plus external. This one is 10 divided by 1, 2, 3. This one is 8 divided by 1, 2, 3. So based on this revenue criteria, component A fulfill and 65%. This one is 20%. 1 and 2 fulfill. Okay, now we're going to check for the profit here. So the total profit that we have here, total all the profit 16,500. In this case, it's simple because all the segment or component produce a profit. Yeah. Okay, so total up. So this one will be 10 divided by 16.5. All this one need to divide with 16 by 0.5. So the component A consider as fulfill the 10%, also for component 2. Yeah? Okay, now we test for the asset. So for the assets here is 50 divided by 87. Yeah? Okay, same thing. Okay, so you're going to have 57 and 34. So all these two, 1 and 2, fulfill the criteria of 10%. So you need to identify. So we already identify here which one become a reportable segment. So component 1 and 2 will be separately reportable since they meet the size criteria. So they meet any of the three criteria. They meet the criteria revenue, asset, and profit. For 1 and 2, they meet all these three criteria. But to be here, at least you need to meet any of three criteria. Right? Okay, component 3 and 4 do not meet any of the criteria here and on the face and it's not separately reportable. So 3 and 4 cannot be a reportable segment because they do not fill the 10% test. Okay, so the 10% test, the external revenue for component 1 and component 2 here is considered as 81% is equal. So you test here, the first one test for 10%, the second one test for the external revenue. So external revenue that you have here is 80 here is from A and then 20 here is from component 2. So altogether you have 100. So 100 divided by 1, 2, 3, which is more than 75%. So you fulfill the 75% criteria. So both of 1 and 2, you fulfill a criteria of 10% or also the criteria of 75%. So both of the one become the reportable segment. Yeah? However, it said that component 3 and 4, if they had a similar economic benefit, we should refer to the para 12. Okay, if they have this one, the 5 items here, product, relate with the product, production, customer, distributions, and regulatory. Okay, if they fulfill that criteria, and then do not fulfill the 10% test, they also can be reported as a combined segment. Okay, if they fulfill the 10% threshold for the revenue, okay, then it could be reported as a combined segment. Yeah? So in this case, if you have here, you're going to have 2 reportable segment and 1 combined segment. 2 reportable segment is segment 1 and segment 2, and then 1 combined segment is 3 and 4. So in the case, is 3 and 4 is not similar economic environment. So 3 and 4, okay, 3 and 4 cannot be a reportable segment. This one is only if. So if, then you can combine that one. Yeah. Okay, so that is what you have for illustrations 2. So illustrations 3, we're going to look at for the next class. Yeah, because illustration 3 here, problem with this profit here when we have a combination. See. Okay, so the important things for this topic, you need to know to determine the operating segment. So operating segments here either based on the business or geographical. Okay, only two. Then from the operating segment, we need to determine the reportable segment. So we need to do two tests. 10% test of the asset, revenue, and profit. And then the last one is a 75% test. So two things that we need to do. And then please be careful with the paragraph. Okay, so that is the thing that we have for to this class, up to this one. So the next class we're going to continue with illustration 3, yeah, when you get in the case when you have the profit or loss of each of that segment. And then hopefully that for the next class we're able to finish this one and then continue with related party disclosure for the next class. Next class will be on next Thursday, isn't it? We're going to have a public holiday on this coming Monday. So what you plan to do for that one? For that public holiday? Any of you? Let's you plan for that one. Going to provide, so we cannot have a class on that day. So maybe I provide you with the recorded class for the tutorials